Welcome to the BF Anderson Technical Report for June the 21st. You know, there are many investment strategies out there. There are bond strategies that, if interest rates are falling and you're long bonds, your strategy does well. If you have a gold strategy and there's a lot of economic uncertainty out there, more than likely your strategy is going to do well. What I believe is that you've got to adopt a strategy that makes sense to you. So over the years, the only thing that's really made sense to me is trying to find the next Walmart or trying to find the next Microsoft. In other words, you look at growth stocks, you look for companies that are growing. Now, when your strategy quits working, there's really not a whole lot you can do about it. Now, some people would argue, well, then you should switch to another strategy. Well, that's a lot harder to do than you would realize. Another strategy would be you should asset allocate, where you put so much in this strategy, so much in another strategy, and so much in another strategy. And what I found with that was that if you had one strategy that was working, and let's say you had two strategies that weren't working, then they just kind of negated each other out. So what I have decided to do is to adopt a growth stock strategy. And so as I've gone through the years, and I will say the last true growth stock cycle we experienced was 1991 to the year 2000. So it has been approximately 20 years since we've had a bona fide growth strategy. So what I want to go over right here real quickly is, and let me set this up. This is the Russell 2000 Small Cap Index. This is a very growthy index. This is small cap companies. These are not the big, Dow 30 type stocks. Now, what I've done here, and I've set this graph up for all the graphs we're going to look at today, so just be aware of this. 125-day moving average, 135-day moving average, and 145-day moving average. Now, it doesn't really matter. You could use 25-day, 50-day, 200-day. I just am using a generic set of moving averages just to make a point. Now, we all know about all the problems out there and all the bad news, and we're going to get into that. But I want you to note that this index, Russell 2000 index, these moving averages have hit an all-time new high. So I've always said that when a group of stocks hit an all-time new high, that usually means something. So here we have the Value Line Geometric Index using the same moving averages. So we keep hearing in the media and what's in all these opinions out there that the bull market's going to come to an end because the ECB is ending quantitative easing, or the Federal Reserve is raising interest rates and stopping quantitative easing, reducing the balance sheet. We've been worried about the Italian banks in Italy. We're currently worried about tariffs. We've been worried about North Korea. And you can say, okay, well, these are all very troubling issues, but what does it have to do with the stock market? Well, at the same time, we've got the Value Line Geometric Index moving averages, which is the average stock. It's hitting all-time new highs. Now, what I did is I went back just to kind of show you the difference. Now, notice this graph. I mean, it's just a nice, smooth uptrend. But if we go back to the year 2007, which was a major bear market, you can see that, the market was doing fine, and then it started worrying about the mortgage crisis and worrying about the financial system. And you can see, this is what a bear market looks like. This is what a downtrend looks like. So if you go to the next graph, this is where I'm doing a ratio. I'm doing a ratio of the Standard & Poor's 500 index, comparing it to 20-year Treasury bond ETF, using the same moving averages. And you can see here, it's hitting an all-time new high as well, which means that stocks are doing better than bonds, is what it boils down to. Now, when you start going into 2007, again, you're seeing the same particular issue. Bonds are outperforming stocks. So something has changed here, and I'm just using 2007, 2008 with these moving averages to show you what a bear market looks like. Today, it doesn't look anything like that. So let's look at another ratio. Here's the S&P 500 compared to gold. So you can see that, stocks are outperforming gold, and this is actually hitting an all-time new high. If we go back again and we look at 2007, The conclusion is you just got to look at the facts. You can listen to TV all you want. You can get all these opinions that you want. The bad news has been discounted. The market is looking to the future. It's not looking at the past, and it's not looking at today. But you need to look at the facts, stay away from opinions, and the stock market is in a very powerful uptrend right now. So if you look here, this is again the same ratio of S&P 500 compared to gold. The economic uncertainty went through the roof, and we had a bear market. So let's get into the top five. Now, realize today when we look at this watch list, you're going to see a lot of strength in the healthcare stocks. This is just something to note. This is a biomed. This is a medical equipment company. They have a breakthrough technology in heart pumps, where you can see that stock is hitting an all-time new high. Moving averages are fine. Very powerful uptrend. Here's another medical stock. We've seen this one before. This is Align Technologies. They are into mainly teeth straightening, and you can see it has recently made an all-time new high, and the moving averages are very consistent. Here's another medical stock, Foundation Medicine. Now, I have not researched this company, but I can tell you the stock jumped dramatically on very heavy volume, and you can see what happened. It jumped from about 107 up to 136. I mean, this is really, really, really powerful. Then we have our old friend Netflix, all-time new high. Analysts are out there calling that within the next 12 months the stock will be at 500. I've got to believe that what's going on with this acquisition of Fox by Disney is having something to do with this performance. But you can see that this is smoke up a chimney. Moving averages look good. Now here's one other biotech stock that has jumped dramatically. Sarepta Therapeutics. Now you're seeing the name therapeutics a lot in these names, which means that that's probably immune therapy, where they're now coming out with a new technology where they're able to trick your blood cells into fighting certain bad cells in your body. But this is biotech, and you can see the breakthrough. So in conclusion, what I'm saying is the market is in a powerful uptrend. We are in a growth stock cycle that we have not seen for 20 years. The last time this happened was between 1985 and 1991. You had a basing period. Then we rallied for 9 years, and the NASDAQ went up 1,500%. Not saying that's going to happen this time, but it's looking like a growth stock cycle because the small caps and the NASDAQ are outperforming the Dow and the New York Composite. Thank you very much.